Hey everyone, welcome back to the channel. Today we're tackling a big one, financial freedom. What does that even mean? For some, it's quitting the 9 to 5. For others, it's traveling the world without worrying about money. Or maybe it's just the peace of mind knowing you can handle any unexpected expense. Whatever your definition is, the path to getting there has some common milestones. So let's break down the realistic steps to building real, lasting wealth and achieving your own version of financial freedom. This isn't about get-rich-quick schemes. It's about smart, sustainable strategies that anyone can start today. First things first, let's get a clear picture of where you are right now. You can't plan a journey without knowing your starting point. This means calculating your net worth. Don't let that term intimidate you. It's simply what you own minus what you owe. On one side, list all your assets, cash in your bank accounts, the value of your investments, your car, your home if you own one. On the other side, list all your liabilities, credit card debt, student loans, car loans, your mortgage. Subtract your liabilities from your assets, and that number is your net worth. It might be positive, it might be negative. Doesn't matter. This isn't a grade, it's just data. This number is your baseline, and our goal is to make it grow consistently over time. Once you know your starting point, it's time to take control of your cash flow. You need to know exactly where your money is going each month. This is where a budget comes in. I know. The word budget can sound restrictive, like a financial diet. But think of it as a spending plan. It's you telling your money where to go instead of wondering where it went. You can use an app, a spreadsheet, or just a simple notebook. Track every single dollar for a month. You'll probably be surprised. At daily coffee, those subscription services you forgot about, it all adds up. The goal here isn't to cut out all the fun from your life. It's about identifying where your money is going and deciding if that aligns with your goals. Are you spending on things that truly matter to you? With your budget in place, you'll likely find areas where you can cut back. This frees up cash for our next crucial step, building an emergency fund. Life is unpredictable. Your car breaks down, a medical bill arrives, or you face an unexpected job loss. An emergency fund is your financial safety net that keeps a small problem from turning into a full-blown crisis. It prevents you from having to dip into your investments or go into high-interest debt when something goes wrong. The standard recommendation is to save 3 to 6 months worth of essential living expenses. This includes rent or mortgage, utilities, food, and transportation. Keep this money in a separate high-yield savings account. It should be easily accessible, but not so easy that you're tempted to use it for a weekend getaway. This fund is for true emergencies only. It's the foundation upon which your entire financial house is built. Don't skip this step. Now, let's talk about the biggest wealth killer out there, high-interest debt. I'm talking about credit card debt, personal loans, anything with an interest rate that's working against you. Trying to build wealth while carrying high-interest debt is like trying to run up a down escalator. You're working hard, but you're not getting very far. So, it's time to get aggressive. There are two popular methods for tackling debt: the avalanche method and the snowball method. With the avalanche method, you focus on paying off the debt with the highest interest rate first, while making minimum payments on everything else. Mathematically, this saves you the most money in interest over time. The snowball method involves paying off your smallest debt first, regardless of the interest rate. Once that's paid off, you roll that payment amount onto the next smallest debt. This method gives you quick psychological wins, which can be incredibly motivating. Choose the method that works best for your personality. The most important thing is to have a plan and stick to it, okay? With your emergency fund in place and a plan to tackle high-interest debt, we can finally talk about the fun part: investing. This is how you make your money work for you. This is how you build true, long-term wealth. Investing can seem complex, but the core concept is simple. You're buying assets that you believe will grow in value over time. For most people starting out, the best way to do this is through low-cost index funds or ETFs. These funds allow you to own a small piece of hundreds or even thousands of companies, which automatically diversifies your portfolio. You don't need to be a stock-picking genius. You can open a retirement account like a 401k through your employer, especially if they offer a match that's free money. You can also open an IRA, a Roth IRA, or a standard brokerage account. The key is to start, even if it's just a small amount each month. The most powerful force in investing is compound interest, and the most important ingredient for that is time. The sooner you start, the more time your money has to grow. As you start investing, it's vital to automate the process. This is one of the biggest secrets to consistent wealth building. Set up automatic transfers from your checking account to your savings and investment accounts every single payday. Treat your savings and investments like any other bill that has to be paid. This is called paying yourself first. You're prioritizing your future self before you have the chance to spend that money on something else. When it's automated, you don't have to rely on willpower. It just happens in the background. Whether it's $50 a month or $500, automating it ensures you're consistently moving toward your goals without even thinking about it. This simple habit over decades can be the difference between retiring comfortably and having to work forever. Now, we need to address a major component of financial freedom: increasing your income. There's a limit to how much you can save by cutting expenses, but there's theoretically no limit to how much you can earn. Think about your skills. How can you make them more valuable? This could mean asking for a raise at your current job, armed with data about your performance and industry standards. It could mean learning a new high-demand skill that opens up better job opportunities. Think about coding, digital marketing, or a skilled trade. You could also start a side hustle, drive for a rideshare service, do freelance work online, sell crafts, or monetize a hobby. That extra income, even if it seems small at first, can be used to accelerate your debt payoff or supercharge your investments. Don't just focus on defense. Playing good offense by increasing your income is a game changer. As your wealth grows, it's important to protect it. This means having the right insurance in place. Health insurance is a non-negotiable. Single major medical event can wipe out years of savings. Make sure you have adequate disability insurance, especially if people depend on your income. This protects your ability to earn a living if you're unable to work due to illness or injury. If you have dependents, life insurance is crucial to provide for them if you're no longer around. And don't forget about homeowners or renters insurance to protect your property. Insurance is one of those things you pay for and hope you never have to use, but when you need it, it is absolutely priceless. It's a key part of a robust financial plan. Finally, remember that financial freedom is a marathon, not a sprint. There will be good months and bad months. Stock market will go up and down. You'll be tempted to splurge. The key is to stay consistent and keep your eyes on the long-term prize. Review your budget and your financial plan regularly, maybe once a quarter or every 6 months. Are you still on track? Do your goals need adjusting? Life changes. You might get married, have kids, or change careers. Your financial plan needs to be flexible enough to adapt with you. Celebrate your milestones along the way: paying off a credit card, reaching your first $10,000 in investments. These wins will keep you motivated for the long journey ahead. So, to recap, know your net worth, create a spending plan, build your emergency fund, crush high-interest debt, invest consistently, increase your income, protect your assets, and stay the course. This isn't magic. It's a proven roadmap. Every step you take, no matter how small, is a step toward a future where you are in control of your finances and therefore in control of your life. That is the true meaning of financial freedom. Thanks so much for watching today. I hope this breakdown was helpful. If you got value from this video, please hit that like button and subscribe for more content on building wealth and living a better life. Let me know in the comments which step you're working on right now. I'd love to hear from you. See you in the next video.